Thank you for joining us for Ask Stacy and Amanda on Bank of North Dakota's Facebook. We put out videos every single week with a variety of topics, so make sure you turn on those notifications so that you know every single time that we post something, especially if it's important to keep up to date with. All right, today we are talking about College Save with the College Save Director, James Barnhart, who is a familiar face on our Facebook and our YouTube channel. And we are going to talk about your tax refund and using it to either start or make a contribution to your College Save account. So James, I know you've been on our Facebook Lives here quite a bit, but just in case we have new viewers, people who haven't heard of this before, what is a College Save account?
Yeah, absolutely. So the College Save account is a 529 savings vehicle, just IRS code that gives people the ability to open up a college savings account in any state, but primarily for North Dakota residents to use the Bank of North Dakota's program, College Save, to save for future higher education costs. And by saving for those future costs, you get great tax benefits, which is the crux of what we're talking about today. First and foremost, earnings are going to grow state and federal tax deferred, and North Dakota residents also get to deduct their contributions annually into the College Save account up to $10,000 a year for married couples filing jointly, or up to $5,000 a year for single filers.
Okay.
But the really cool part about it is anybody who contributes to a College Save account, regardless of whether you own the account or not, gets to take that annual tax deduction. So now your family and friends who are residents that want to give to that child or grandchild can do that without owning the account.
That's awesome, and that's a really important thing, just because I think we all know tax day is next Monday, so hopefully most of you have filed already, but I'm sure there's a lot of folks who are working on that like right now this week. So yeah, just a gentle reminder, if you are contributing to a College Save account to take that deduction on your North Dakota state tax return.
Yeah, absolutely. And it's really easy to do if you're using H&R Block or TurboTax or CPA.
Or if you're doing it yourself.
That's right, exactly. That's where the computer comes in. It comes up and we'll ask if you're making that contribution, and you just put in the dollar amount, and it's going to reduce what you pay in taxes to the state.
Awesome. That is great information to know. So for those folks who have already filed, gotten their tax refund back, what are some great ways that folks can use that tax refund, or a portion of it at least, to either start or contribute?
Yeah. So when you open up a College Save account, it just takes as little as $25 to do that, and future contributions can be as little as $25 up to what you can afford. So at this time of year, when you might be getting a large refund back, it's a great time to supplement what you're putting into your College Save account. So a lot of people choose to make yearly contributions, even though we recommend making consistent, smaller amounts on a monthly or quarterly basis. It's a great time to be able to take not only that tax refund and proportion it, right?
Yep.
And supplement that. Over time, that's really going to make a big difference, because the longer you have to grow these funds, the more they're going to turn into with compounding and the earnings that we have. So we're not asking you to put it all in there, but boy, if you want to make a difference in that child or grandchild's life, that sure would be something that's exciting to do.
Yeah, and some tax refunds, especially this year I've been hearing, that'll give your
Oh,
College Save
nice.
account a nice little boost. So
Absolutely.
good. So are there any new benefits this year, either to the plan or to College Save in general, that folks should know about?
Sure, yeah. In addition to the grant programs that most people qualify for, remember, all new babies, when they have an account open before their first birthday, get a $200 match, no income restrictions. And then we've got the B&D match. Families earning $120,000 AGI or below get a $300 match, and that's for kids up to 16 years old living in state or out of state. But really new this year is K through 12 qualified tuition.
Oh.
So now your child who's attending a private or religious school in the state of North Dakota, not only can you use our 529 plan to save for those future college expenses, now you can cycle money into the plan and take a qualified withdrawal, and all those contributions still count as the in-state tax deduction. So for a lot of private schools, the cost is anywhere between, let's say, $4,000 to $7,000 or $8,000. You can now put that into your plan in addition to what you're saving for college, maximize that $10,000 tax deduction, thereby saving yourself hundreds of dollars and reducing what it costs to send your children to private school.
Wow, that's an awesome benefit this year.
Yeah.
So I think I've maybe asked this before, we've covered this before, but high school students, can they use this to help pay for dual credit classes?
They can. So,
Okay.
but only for tuition, and you have to be half-time to use it for room and board.
Oh, okay.
Right, so you have to be at least attending half-time and, living away from your parents to use that as an expense. But for
Okay.
tuition credits themselves, absolutely for that dual credit
Perfect.
purpose.
Okay.
Yeah, but we see that more and more.
Good. Well, that's a great benefit just because, taking those dual credit classes in high school is a great way to take classes cheaper than when you're in college.
Absolutely.
So, awesome.
Encourage that.
All right, so any last things that you want to say about College Save before we log off today?
Well, it's never too late to open up an account, no matter what age child you have. Most people are doing it when their children are much younger, but if you've got a teenager, for dual credit purposes, remember, saving for 3 or 4 years before they go off to school is going to make a big impact on your future student loan debt. And people always forget that they're also going to be able to save for those 2, 3, 4 years while the child's in college.
Okay.
Maximize that in-state tax deduction while they're in school, and again, further reduce that student loan balance.
Wonderful. All right. Well, as always, James, thank you
Thank
for
you.
lending your expertise. We really appreciate it. Anybody, if you have questions, I didn't see any that have come up during the live video, but if you have any questions after, go ahead, leave us a comment below, send us a direct message, and we will get back to you as soon as we can. Otherwise, until next week, we will see you then. Bye-bye.